No big recovery today for the American markets after a deeper dive this week. Our next guest says the sell-off has been an overreaction. Let's go to Lisa Schreiber, Associate Portfolio Manager at Gradient Investments. She joins us now. Lisa, thanks for joining us. On the software threat, you say there is merit to some of the concerns, I guess. What businesses do you see at risk?
Yeah, I mean, it was a tough 2 weeks so far in the markets, especially around AI, right? I mean, it all started off with Claude coming out with their new AI assistant that ruffled some feathers with, especially with the traditional software as a service companies. But by now, it seems no industry got spared, right? We then had more reports of Altruist, for example, coming up with a tax planning service, which ruffled some feathers for wealth managers. Then we had also spilling over into real estate. We had it also seeing yesterday with trucking and freight companies, which are more traditionally more old economy sectors who were seen so far to be a little bit more spared about the whole AI frenzy. And I think overall there's a lot of headline news out there, and investors are generally more nervous, right? I mean, given like the whole AI disruption fears, the whole AI capex spend that just seems to go nowhere but up, and also the returns on investments that are not as clear yet as some advisors wanted to see, then we also see that investors are acting first and selling first in that case, and asking questions later. And again, I think it's all very much overblown through the roof here, but there is some merit to it. I mean, given all the sophistication of these AI models where we are right now, right, it can make some of these traditional software as a service companies and all of that obsolete over time, and there will be for sure winners and losers. But again, I think the most important thing to mention is here, this will not happen overnight. This will not be adopted broadly overnight, and for now it creates certainly great opportunities for buying some of these quality names that were beaten down pretty dramatically.
Okay, I want to talk about the quality names you pick up in a moment, but I'm wondering, I know you're saying adoption will take some time, but should we expect more disruption soon? Since, as you mentioned, we're seeing so many now of these products come out, boom, boom, boom.
Yeah, definitely. I mean, it started again with software. It ruffled some feathers and all of that. But I think these companies, first of all, and there will be winners and losers, and there will be some that will be obsolete. But I think I want to give an example here. With Google, for example, it was a longer laggard within the Mac 7. At first, when OpenAI came out with ChatGPT, investors put basically Google and Alphabet to the dead, saying, okay, it will disrupt their search business. It will become obsolete. Company will have no future over the long run. And then what we saw last year, Google came roaring back, right? Their search numbers are doing very well. They came out with their own AI model, Gemini, which is also doing fantastic. And now it's the leader of the Mac 7 cohort, right? So these companies obviously have to step up their game, have to find new ways to create revenues, have to find new ways to implement that going forward. So that is certainly needs to happen there. But I think overall it's very, very helpful to disperse a little bit here of what is really happening and when it's happening. And again, that's not happening overnight. And we see a lot of these headline numbers and headline tools coming out here, which is certainly a big disruption. But I think overall, this will create opportunities to snatch up some of those beaten down names and then wait for it.
Which ones would you pick at today?
We still very much love Microsoft. I mean, Microsoft was one of the beaten down names here. Palo Alto Networks as well, right? Strong in cybersecurity. I mean, these businesses are very well set up. Their fundamentals are totally fine. They reported great earnings, right? Nothing is wrong with that. They just caught up within all of that frenzy. And I think that would be a good entry point here of some of these quality names that will probably do very well going forward.
Are there other sectors that you see are suffering for no real reason?
I think, as I mentioned before, wealth management got beaten down dramatically after Altruist came out with their own tax estate planning AI tool. And we saw Schwab and Stifel and Raymond James, all of these traditional wealth managers pretty much sold off. And I think there is that was overblown as well. We saw that. And I think you can still remember that a couple of years ago with the first robo advisors when that all came out. And I don't know of what iteration iteration we are, robo-advisor 3.0 or 4.0, in what iteration we are, but it was not as bad as expected at the end of the day for these traditional sectors, right? Because as long as people do not want to hand over all their assets and all their finances to AI and to those robots, so to speak, as long as we still need humans there, as long as these sectors will be doing fine going forward. And that's just one example in one sector here where I don't see disruption, obviously, but I don't see these sectors going anywhere soon, and these names will probably very well do fine going forward.
Some of the movement away from AI and from software began late last year, but it really has picked up more recently. Do you expect this kind of volatility then to continue this year?
Yeah, like you said, I mean, we saw some broadening out and market rotation starting actually at the end of last year, and then coming into this year, intensifying we see more small cap participation, which is great, and we see just a broader participation of value stocks, more the picks and shovel and more the old economy sectors, right, coming up. And I think overall there is higher volatility, there is a lot of nervousness, and it doesn't feel comfortable right now. But overall, I think it sets us up for a healthier market going forward, where we see strong leadership beyond just the 7 or 10 large names, right? And I think that sets us up for just a more diversified approach and just a more diversified return profile going forward. And I think that can be sustainable right now.
Okay. Lisa Schreiber, going to leave it there, but thank you for your time. I appreciate it.